Good morning, everyone. My name is Sarah Benizio. I'm with the Bronx Chamber of Commerce. I'm joined by my colleague, Francisco Aguilar. He's our membership manager here at the Chamber, and today's co-host for the BXCC How to Get Bankable workshop series, Mr. Miguel Matos from Tax Focused Collab. He's got a really incredible presentation for you today on taxes for business owners, and we're going to get started in just about a minute and a half while we let the rest of our guests come into the attendance room. Sit tight. We are recording today's presentation, so please be advised that this will be available on the Bronx Chamber YouTube channel, and we'll be sharing it across all of our social platforms as well as our email newsletters and on our website. We're just going to give it about less than another minute before we get started. Many thanks to everyone who made time in their morning to join us today. You will not be disappointed. We got a lot of great content for you this morning from Miguel of Tax Focused Collab. All right, it's just about 9:02, so I think we're going to get started. Good morning again, everyone. My name is Sarah Benizio. I handle communications and capacity building for the Bronx Chamber of Commerce. I'm joined by my colleague, Francisco Aguilar. Many of you have spoken with him because he is our amazing membership manager. So I'm going to go ahead and put the spotlight on him to introduce himself and our wonderful co-host this morning, Mr. Matos.
Good morning, everyone, and thank you for joining us. As Sarah mentioned, my name is Francisco, and I'm the membership manager here with the Bronx Chamber. I may even know some of you from my time as a specialist, and I think this will be a great opportunity for you guys to learn a bit about how to get bankable. It's our first opportunity for our workshop series of how to get bankable with the Bronx Chamber of Commerce, and I can't wait to introduce our guest today from the Tax Focused Collab, Miguel Matos.
Hello, everyone. My name is Miguel from Tax Focus. This is a new venture for me. However, I have been a tax practitioner working out of the Bronx for over 5 years, and inspiring entrepreneurs and keeping entrepreneurs compliant is my passion. It's what I went to business school for. So anything involved with business is something that I definitely surround myself with all year around, not just during tax season.
That's wonderful. Thank you so much for joining us this morning. So I do want to mention that Miguel and Tax Focused Collab are one of our newer members here at the Chamber in our executive circle, which does allow for co-hosting webinars, workshops, hopefully soon in-person workshops. So that's one of the member benefits at that level. So we're very excited to have him aboard. And also he is a graduate of Mercy College, one of our wonderful Bronx educational institutions happens to be, the Bronx campus happens to be our neighbor over here at the Hutch Metro Center where the Chamber is located. So, and they've been a long time high level supporter of the Chamber as well. So it's great to have that synergy. So welcome to the network. And yeah, I think we're going to go ahead and get started. So I'm going to put the spotlight. Oh, no, spotlight is on Miguel. Take it away.
Okay. So I'm going to move forward over here to my first slide. These are some of the topics we will be discussing today: formation structure, business types, financial documents you should know as an entrepreneur, tax payment obligations, tax reporting obligations, sales tax, other taxes, and other common topics which I see coming across my desk from entrepreneurs.
So just a quick housekeeping. I'm sorry, I should have mentioned this earlier. We will be accepting your questions and comments throughout the presentation. Please use the chat or the Q&A. And then at the end of each of these sections, we will address topics pursuant to those sections. And then at the end, we'll do one big Q&A.
Cool.
Take it away.
So another thing that I want to stress to you guys as entrepreneurs, a lot of entrepreneurs are do-it-yourselfers and wear many hats. But one of the things I want to stress to you is that it's always good to have a good relationship with your neighborhood local accountant. The reason why I want you to work with a local neighborhood Bronx accountant, because it's complicated doing business in New York City. New York City is a 3-tier tax system, and then you have sales tax and other compliance taxes that go along with it. It is very difficult to keep up with, depending on what industry you're in. So having a good relationship with a local accountant down the street, not just someone you're following on YouTube, which has been the habit nowadays, is definitely important. Okay, so let's go on to our first slide. Formation structures and business types. In New York City, people can do business as a sole proprietorship or single member. America loves business and will never stop you from doing business. So just know you do not have to form a business to do business. As long as you're being compliant and paying your taxes, they're going to love you and encourage you to do business and encourage your success in business. However, there are ways you can do this. You want to safeguard yourself, you want to safeguard your assets, and you want to grow in a professional manner. So I always advise to definitely incorporate your business. Some people that do not have to incorporate, I would say, are people that maybe are just making miscellaneous income through a rebate or a cash incentives from their main employer. I want to give you guys an example. I have a guy who works at a car dealership, and the car manufacturer gives him gift cards, and he is 1099 for those gift cards. This person should not go and form a business because the risk isn't really there and the business isn't really there. They're getting a 1099, yes, but he's not in the business of selling cars outside his W-2 employer. So this person really doesn't have major risk. So that's one of the major factors that you go into when creating your business, is to protect your personal assets. And you shouldn't go in thinking, well, what's the best tax situation for me? Tax situation comes secondary to protecting your assets. When you're protecting your assets, because that is the most important part of making the decision, you want to make sure that you can remain compliant. So you should go into one of these situations that you can handle in your current business situation. I see a lot of people that come in and they start off as S corps or corporations, and that's not always the best fit for them in their current journey as an entrepreneur. Maybe they have no sales, maybe they can't afford to be payroll compliant, or maybe they just don't have the money to file 2 tax returns at the end of the year, their personal and their business. So going on LegalZoom and starting off your business on your own is not always the best decision. You should sit down and really speak with an accountant or a professional about where you are in your situation and how you're best going to remain compliant throughout your journey. So these look like the streets of New York City to me. So that's why they're drawn like that. And I will bring you guys to the attention that maybe you did start off as an LLC, or maybe you did start off as a corporation or S Corp. And there are 2 little cards right here. I have the 2553 and the 8832. And these are IRS forms, actually. And the 2553 will take your corporation once it's filed and you become an S Corp. One of the things I want you guys to look out for if you're a new entrepreneur is that you are not automatically elected an S Corp on the day you form your business. You have to file the 2553. It has to be printed out. You have to physically sign it. You have to physically mail it. You have to physically get a response from the IRS. You have been elected an S Corp. I've seen many situations where someone comes to me, they formed their business last week and they're already an S Corp. I don't think so. You have to have a full grasp of what your business is and where you are along the process. I've had myself file tax returns, an 1120S, and be accepted, only to a year later, someone comes asking for their official notice that they've been elected an S Corp. So little situations like that can happen. Typically, it's New York State, which has the full budget to really chomp down on compliance of entrepreneurs. So you definitely want to stay on top of all your paperwork and keep paperwork like that for as long as possible. Okay, the next one I want to speak to about is your partnerships and multi-member LLCs. These guys are for two partners, not just a single member LLC. Any questions so far?
I don't see any in the chat.
All right, so I want to also mention the form. I may have skipped this one, is the 8832. This form is much like the 2553. However, this form states that you can switch your classification from a corporation designation back down to a single member LLC. And that's what that form is for. So if you currently feel like you're in the wrong tax structure, don't feel like you have to go dissolve your business, go dissolve the name that you spend so much time thinking of, when there's just a form where you can change your designation. Again, you have to submit these forms, sign them, send them in, and receive notice back from the IRS that your tax designation has changed, your tax type has changed, and also you want to forward that to New York State and notify them as well. So again,
what happens if you don't?
If you don't file a form, you won't be officially recognized. So at the end of the year, let's say you started off as an Inc. corporation, you never filed your 2553. Sometimes you will get a rejection. I'm gonna say not all the time, because I have had experiences where the IRS accepted an 1120S, and then a year or two later was asking, where is that 1120S?
Oh wait, no, I didn't mean to accept that.
Yeah. And
never a dull moment.
As a matter of fact, it was New York State that came first asking for the letter. And then I went back to the entrepreneur and I said, hey, where's your letter? And they said, hey, we never got one. And then I actually contacted the IRS, and the IRS also said, hey, by the way, we see this, it's just hasn't been processed. It actually took 2 years for that 2553 to be processed. And that was the case.
Lesson learned. Actually, a question did just come in, and I think it's two questions just came in, and I think you might want to address at this juncture in the presentation. Okay, so let's start with the first one.
Okay.
Can you use the same EIN number that was registered for a sole proprietor and change it to an LLC business?
Yes, because you can do that with the 8832. That does change your tax type. So once you fill out that form, it will allow you to be taxed as an LLC member if you want, multi-member LLC, or you can choose to be taxed as a corporation.
With that, and you can keep your EIN number.
You'll keep the EIN number, you'll keep the name.
Cool.
This confuses some entrepreneurs that maybe have been around for many years. I have businesses that come in and they're LLC, but along the way, they've chosen to be taxed as a corporation. And you have to know, because part of making yourself bankable is that if you go to the bank with the LLC, typically the bank manager has an idea, okay, LLCs, I need these set of documents. But if you, along your journey, you've changed your tax type, you have to let that banker know, hey, I've changed my tax type and I filed these type of documents. They may be looking for a Schedule C when they should be looking for an 1120S. And then maybe they want payroll because you've elected to be an Inc.
So the moral of the story is you need a tax professional to help you along this journey, because so
Yeah.
many things can and will change, and you got to have those forms and you got to have that paper trail, right?
If you make a change, have a firm grasp on what your tax type is and what you're required to have.
Second question came in that is also relevant. For an LLC, is Form 2553 needed?
2553 for an LLC. No. Well, yes, you can choose to be taxed as a corporation if you are currently a single member LLC or a multi-member LLC. So you can make that designation to be taxed as an S Corp.
Okay. Great. Thank you.
So these cars can take you back and forth. Just make sure you get
I like that that symbolism. Apropos.
Okay, so okay, so with that part of making yourself bankable, the next topic is financial documents you should know. These are documents that you should have ready. You have to have them ready when you go file your taxes, your business taxes at the end of the year. As a tax professional, I love it when somebody comes in with their income statement, because it shows that they're on top of their business and know what's going in and out of their bank accounts. That is your income statement. It records all your income, revenue receipts, I should say, and then all your expenses associated with the business. Some entrepreneurs have multiple businesses. You should have a different bank statement, income statement for each line of business. So make sure you're not commingling line of businesses. You definitely want to work with a tax professional here, because I've seen a lot of silly mistakes where they are recording maybe sales tax in their income statement, and sales tax should not be reflected on your income statement. Other things like that occur. The second one you want to know is your balance sheet. As you're growing your business, it's always good to keep a balance sheet on QuickBooks or with your accountant on his books. Just know that when you do grow up to that $250,000 mark, you are required to report a balance sheet to the IRS on your tax return. So it is good business practice to just have that from the beginning. So remember, a balance sheet is required to be reported once you hit the $250,000 threshold. And you will want to work with your accountant to build that. A balance sheet is as healthy as you put it in, as you put work into it. Your accountant really has to know everything that's going on in your business, everything that you purchase, heavy equipment, even your contract of your lease agreement should be on there. It's really a snapshot of your credit health, what assets are there and what liabilities are in there. This is your opportunity for you as an entrepreneur to create a little, what do you call, credit report on your business. Okay, this is what I have. This is what I have due. The third statement is the cash flow statement. This one is a little bit hard to understand for an entrepreneur, but basically it tells you what you are already feeling in your business. Am I being successful? Can I handle more debt? Where's the money coming from? Where's the money going? Sometimes you may have a profitable month, but you know that you also have outstanding bills. The cash flow statement will tell you, hey, this guy cannot afford outstanding bills, any more debt because he has outstanding bills. So just because you post a profit doesn't mean that you have positive cash flow. Bankers look for positive cash flow because they want to be able to know if you are able to cover that new loan that they're going to give you or whatever the case may be. Any questions so far on these three statements?
There were actually a couple of questions that came in right as you segued to this section. Would you mind going back quickly?
Yeah, we can go back.
Okay. Okay, so Brenda asked, what is the benefit of being taxed as an S Corp?
So LLCs are pass-through entities, which means 100% of the funds are passed through to your personal owners and reported on their personal income. That's where you pay the income tax. The benefit of having an S Corp, let's say I'm a tax accountant. my tax office generates $100,000 in profit. There are a few ways that I can divvy up that $100,000 under a corporation or an S corp. If I were LLC, that 100,000 would flow straight through my personal bank account. Under an S corp, I'm required to run payroll, wages. So that $100,000, I could look at my peers, the market, and say, hey, as a tax professional, I only typically make $50,000. So I would run myself reasonable compensation of $50,000. I would then pay my tax based on that wage, $50,000, which can be, between 15 to 20%, depending on the makeup on your family. However, the excess above that can be viewed as passive income, or you'd be taxed at a lower rate when it's distributed to the business owner. And that is the benefit. You then are able to adjust what that 100K is taxed at. Either it's going to be taxed at your personal rate, 100%, or as an S corp, you could choose to have part of that taxed at a wages rate and the other half taxed at a lower tax rate as a business owner. It is seen more as a distribution.
Another question, I guess, closely related to that, the benefits of being taxed as an S corp versus a single member LLC.
So that's one of the things I just mentioned. A single member LLC, it's 100% pass.
That's 100%. Okay.
Yeah, you're going to pay your Social Security and Medicaid taxes on that, which are called self-employment taxes. You're also going to pay federal income tax on that. So on the full, let's say, for example, 100,000. In the other example, I'm paying Social Security, Medicaid, and income tax on my wages as an employee of the business I own. But anything beyond that, I'm not going to be open to Social Security and Medicaid tax. I'm just going to be paying the federal income tax. A lot of people go on YouTube, and I've seen guys come in, hey, I'm an S corp. Why did you choose to be an S corp? The first thing that comes out their mouth, hey, I heard I could avoid Social Security and Medicaid tax and pay a low tax rate. Well, you're right, but you are also required to run yourself reasonable compensation. If you are not running yourself reasonable compensation, you're not in compliance, and you can be stripped of your corporate elections, and you will have to go back and pay taxes on 100%. They'll treat you just like a sole proprietorship. So as I said before, maintaining where you can maintain your compliance and your business structure, because at the end of the day, we want to protect ourselves and our assets.
And usually a shortcut is going to cost you in the long term, right?
Yeah. So someone brought up a PPP one time. Hey, I was doing a few PPPs for people. Why am I not approved for PPP? Well, you are a corporation and you never ran payroll. PPP was based on payroll for corporations. If you were an LLC, you could give them a nice income statement because everything is a pass-through, and Schedule C and say, hey, I'm compliant. I'm reporting my Schedule C. This is my income statement. The bottom line, that's my income. Here we go, nice and easy. Not much to be, that's why I recommend the LLCs, and you really have to do a thorough interview on new entrepreneurs. If they are not planning to have employees right from the start of their business, then maybe a corporation is not for them, because reasonable compensation is such a big part of being compliant in a corporate structure, whether it's just a C Corp or S Corp.
Is it true that if the business doesn't make at least $10,000, they don't have to file
a tax return? No, that is not true. You always have to file a tax return, even if it's zero, even if it's negative. You want to carry over those losses. If it's a multi-member LLC, yes, you still have to file a tax return. S Corp, yes. Corporation, yes. You are always required to file. In fact, even if you are losing money, which we'll get later on down the line, you are required to pay some sort of tax, some sort of minimum payment.
As the owner, will you have to file a 1040 for the income you pay yourself as an S Corp?
Yes, because you do get a W-2 at the end of the year from your own corporation.
Last question for this section, because I know you're going to want to move on. If I am making a loss, am I supposed to file employment tax and Social Security as a sole proprietor?
No, you won't be required to pay that, because your Social Security and Medicaid tax SE tax, self-employment tax known as, is based on income. So that line will be zero because your net income is zero or negative.
All right, please go on and we will address anything that has not been thus far at the end of the presentation.
So we spoke a little bit about this. Once you hit 250 mark, you're required to keep a balance sheet, an income statement. You should be, every entrepreneur should be able to create a simple income statement for themselves. Cash flow statement is less important, but you should know what it is because that's what the bankers are using to judge you. Okay, so tax payments. This is a pretty good topic. People are often surprised when I tell them the first tax day of the year is January 15th and not April. So as you guys know or may not know, as a traditional employee, you pay your taxes when you are paid, right? That's because the tax system is a pay-as-you-go system. A lot of entrepreneurs believe, hey, you know, I don't worry about taxes. I file them at the end of the year. That is not true. You are required to pay taxes on a quarterly basis if you are profitable. So here are some of the tax dates for the first quarter, April 15th, for the second quarter, which only covers 2 months, it's June, then June to August, September, and then September to December is due January 15th. And what these are, they're mini tax returns, you can think of them, and mini income statements. If you are at a profit, you should send in a payment. Again, we are living under the 3-tier tax system that should have been in my intro. It gets kind of difficult under the 3-tier tax system. And not many people talk about it because you should always, especially in New York City, we're dealing with the federal IRS, we're dealing with the state, and we're dealing with New York City. So always remember you're doing business under a 3-tier tax system, at least. Make sure you're sending payments to all these guys, or at least paying attention to whether you have to or not. All your estimated payments should be broken down the same way. You're going to send a payment to the federal IRS, New York State, and New York City. This is whether you are an entrepreneur, sole member, LLC, or LLC. As long as you are profitable, you should be making payments. Any wages which are not, any income which is not open to employer withholdings, such as in a paycheck, you should be making estimated tax payments. If you are a corporation, you should be making your first payment by the 15th. This is a mandatory first installment payment. This is a New York State payment, which they ask for. So no one gets away from this, even if you are an active trader. I was speaking with a bunch of day traders the other day, and if they're making money and not paying taxes, hey, every quarter you run yourself a little income statement and you pay your estimated taxes. What is the penalty for not doing this? It's a few percentages at the end of the year. How can you get away with this? How can you get away from that? Making your estimated payments or making full payment by January 31st and filing your tax return. If you don't, there is a penalty if you pay by April 15th. So let's say you're an entrepreneur, you do business all year, and you wait till April 15th to file your Schedule C. Well, within that tax payment is definitely a penalty built in there just because you failed to make quarterly payments. Your accountant at the end of that meeting should let you know, hey, this year for 2022, you should make quarterly payments in order to avoid that small penalty that's built into your tax, which is due on April 15th. So any questions about the 3-tier tax system or pay-as-you-go system so far?
No, there's a couple of lingering questions about business type that I think you could probably address at the end.
Okay. All right.
Oh, wait,
So,
here comes something from Bernard. How do I make sure I'm making the right payments and not paying too much or too little?
So every quarter, as I mentioned, you want to create a mini income statement for yourself. And based on that bottom line number, you can look at your prior year return and see more or less what your tax percentage is to the federal IRS, New York State, and the city, and make a good estimated payment based on those numbers, estimated numbers. You should pay at least 90% of what it was prior year if there are no major changes. But you also make adjustments in case there was a really big influx of business. I have some restaurant owners who all of a sudden get a large order or a large party into their business, and they should recognize that and make a higher payment if it really created that much profit than the prior year. So much more profit than the prior year. At the end of the year, the IRS wants to see that you're roughly about 90% paid up of what your actual is going to be in April. So always know we're reporting estimates, and then April 15th, we're reporting actuals.
So your answer might dovetail with this other question. If I overpaid sales tax, how do I submit for reimbursement, if at all possible? Is it just balance? Is it balance out with the next payment?
No, you'll have to create an amendment to that original sales tax return for that period, and they will issue you a refund.
Okay. Is it true in New York, if you sell something digital, for example, a digital design, there is no sales tax?
Yes, I haven't dealt with that topic in a while. I used to be in the digital, and that is correct, I believe. You cannot give them a actual disc or anything. It just has to be a digital file.
Like a PDF or a JPEG. Okay.
Yeah. I haven't dealt with that in a while, but I used to be in the media industry, and I remember there was something about where people would deliver drives to New Jersey facilities because that was the hardware component of it. And then they would get away with the sales tax. This is big corporate stuff, so.
They got it all figured out.
Yeah.
How can you see the sales the IRS is using to calculate your tax liability?
Well, as an entrepreneur, that's the great thing. You calculate your tax liability. However, there are reports which are 1099s, which are going out. And I encourage all entrepreneurs to really get on top of their record keeping this year for 2022, because there was a big news about the 1099Ks for anyone who gets at least $600 in payments throughout the year. The IRS is going to be inundated with a bunch of fresh new information on the various industries going on when those 1099Ks are reported. So this is a good year to get a firm grasp and start creating your income statements. Really
good year to get an accountant. Right?
Yeah. So, PPP came around. All of a sudden, they found themselves with all these entrepreneurs claiming to have income. Well, now they say, hey, we've been missing the boat. Now everyone's getting a 1099K. You're going to be prepared for that. And the next thing I hear that's coming down in Congress is that the IRS wants a bunch of funding to help support their infrastructure in the IRS, customer service, whatnot. But that's also going to be auditing. They're going to audit a bunch of these people based on the 1099Ks. And if you're not ready, they could go back for a number of years and question a lot. So
Can I pay estimated tax through the IRS website, or do I have to go through an accountant or H&R Block, et cetera?
No, you can pay through the website. The IRS has come a long way, so congratulations to them. And this whole pandemic really pushed it. Before, there was little to no interface between a small taxpayer and the federal IRS. New York State has always done a great job, so I commend them. There's a lot of portals where you could go on there and do a lot of stuff yourself. And this year, the IRS has really stepped it up and created interface portals. The question before, how do you know what income the IRS sees? Well, there's something called the wages and income transcript, which you can order. They are still a little bit difficult to read if you're not financially savvy or can read certain statements, but you can definitely get that from them. And that's what they see.
Should we start an LLC to do Airbnb? Is that yet legal in the city?
I believe that if you own the home or house, you can. But if you're a renter, I don't think your landlord is going to let you do it.
Yeah, that was always kind of a changing gray area. Okay. Explain the 1099K a little more, please. Does this count money from clients or sales? I'm just reading the questions. I'm not sure how to
Yeah.
interpret that.
So I'm not 100% sure how this is being handled. But I remember reading one of the executives or the CEO of PayPal and Square, they've both been mentioning and making sure people know that you can designate whether it's peer-to-peer, just, we're at dinner table and we're giving each other money for that versus an actual business transaction.
Gotcha.
So the sender will have to go and do that of the funds and specifically say, hey, this is personal. I don't know exactly how that's being implemented, but from the notices I've been seeing, it's there, it's possible. Now, if you are doing business with someone and it's business to business, you definitely want to make sure that's recorded as a business transaction, right? You want to be protected. If you buy a pair of sneakers, you pay the person with Cash App, but then those sneakers are fake, you might regret tagging that as a peer-to-peer, I just gave him money for
That's a good point.
Yeah, so whenever you're doing things like that, you want to make sure that it's buttoned up and tagged as a business transaction, just so you can be protected. So $600, anyone who receives a total of $600 will receive a 1099K. That 1099K reports the electronic transactions by month. Yeah, and that's what I know about it so far. I'm surprised it hasn't come out previously because if I hire someone and I pay them $600, I've always been required to give them a 1099 non-employee compensation form. So why the industry has been lagging on electronic payments, I don't know why, but it's come around. Previously, it was 20,000 on electronic payments, which the IRS officially was notified about. So now they'll be officially notified about anything $600 or more.
Got it. All right. I just want to be mindful of time. We're 9:37.
I can talk all day. So
I know you have a very robust presentation for us. Do you want to? Yeah. Ooh. Okay. This is.
Want to go to the next one?
Yeah.
Okay. This one might be a little bit intimidating. Ooh. This is the tax reporting obligations aspect. And as I mentioned, you're in New York City, 3-tier tax system. A lot of people on YouTube, we're entrepreneurs, we love getting information. So you go on YouTube, find your favorite YouTube guy. He's telling you all about your business, but they fail to leave out any state or local questions and regulations. That is because they want to appeal to the masses. Well, this is where your local accountant comes through for you, because they're going to tell you about the city filings, the state filings, not just the federal filings. So if you guys want to take a snapshot of this, I'll run through this quickly as possible, telling your obligations. I'm not even sure what time it is. But let's start with sole proprietorship, single member LLCs. You formed your business. This federal filing is going to go on a Schedule C of your 1040 tax return, and you'll pay Social Security and Medicaid tax built into that tax return. That tax return this year is due 4/18 because the 15th just happens to land like on a weekend or something funky like that. The state filing for this, you trickle down. There is the IT-201, which is your personal income tax filing. And then there's the 204LL. This is a little known tax filing, which it only costs $25. It's a separate form. You fill it out, send it in. This is to keep your LLC compliance up to date. And it's just a minimum payment, which is required. Don't forget to have your tax professional do that if you're filing a Schedule C single member LLC. It's an additional $25. You mail it in, you want to stay in good standing. The next level is your city filing, 3-tier tax system. So once your business has reached 75K in income, you will be susceptible to unincorporated business tax, and that's a New York City tax. When you pay that, you can then go and get a deduction on your federal tax return, just FYI. I'm sorry, on your state tax return, just FYI, not the federal. That's for paying the unincorporated business tax. Go down to the next level, multi-member LLCs, so more than one business owner. I should mention in the beginning, a lot of new entrepreneurs, someone creates the LLC, the second owner is like, hey, where's my name? Sometimes the second and third owner's name are not listed in the formation documents, but this is your opportunity to be recognized in the tax system. You will be issued a K-1 through your 1065 tax filings, which is due March 15th. That's 1 month prior because they want you to have that K-1 in your hand and at least a month for you to go file your personal tax returns. The next level down on the LLC multi-member partnerships is that 204 LL, say $25, you have to pay that. And then New York City 204 unincorporated business tax, that starts at $95K. The next level down is S Corps and corporations. These guys are due April 15th. They file the 1120 or the 1120S. You should know that the S Corp is not double taxed. The corporation is, so the corporation will pay federal income tax on all levels, and then the S Corp does not pay federal income tax on any of the levels. However, this is again where it could be dangerous to be surfing YouTube. A lot of people say, hey, you know, I'm not susceptible to, it's all pass through as an S Corp. Well, that's not true on the city level. A lot of new entrepreneurs, they come in and they go, hey, you know, I'm full pass through, why am I paying tax? Hey, you forgot, you're doing business out of New York City. New York City does an 8.8% tax on that net income. So you are pass-through entity for income tax purposes on the federal level, on the state level, but there is a New York City tax which will be paid there. Fourth line is the corporations, double tax straight through. Even on payroll, you're gonna have to pay some AMT additional taxes, and the tax rate on the city level is various depending on your total gross receipts. So always keep in mind, you're doing business in New York City. It is a 3-tier tax system. Just like your estimated payments have to be through 3 different tiers, your filing has to be through 3 different tiers. And we are no different than a W-2 employee. When you look down at your W-2, at the end of the year, you know, your paycheck, you're paying city taxes as an employee, you're paying state taxes, you're paying federal taxes. The same is true as an entrepreneur. You know, just don't forget that, because this is how you maintain your compliance and your protection of your assets. That's the right. Even if you are losing money, which I mentioned before, there are minimum taxes. So even if you are a sole member LLC or corporation, you still have to pay that $25 fee to the state every year. Depending on your revenues and receipts, corporations will be between $25 to, I'd say, $500 annual fees. So always be, again, open-minded. If someone tells you, hey, you don't have to pay any taxes in your Inc. just because you lost money, you know, don't take that for what it is, because there are compliance costs, minimum franchise costs, and fees that are imposed on you when you're doing business in New York City, even if you're doing a loss. Any questions on our tax reporting? 3-tier tax system. All these little mini filings are in your tax return. That's why the package is so thick. Your tax return package is like 50 pages.
Not seeing any specific to this at the moment.
Okay.
You have such a packed presentation for us. It's wonderful. Thank you.
What time is it?
It is 9:44.
Okay, I'll try to hurry up. So New York City Certificate of Authority, if you are selling tangible goods, you guys have to, that's an easy one, tangible goods. You sell something, you have to collect sales tax on it. As if you are a business owner and you buying these tangible goods for resale, you do not have to pay sales tax at that point. So let's say I go to a Restaurant Depot and I'm a restaurateur, I'm not paying taxes on a lot of those goods. I am paying taxes on things like my garbage bags, my cleaning equipment. That is because I am the end user of that. I'm using it at my restaurant. My napkins, my supplies, I am the end user of those things. But if you're buying something for resale, such as the food, you probably don't pay sales tax on it because the end user will pay that sales tax. Here in the city is 8.875% total. For most people, not for everyone. And how that is broken down, there's the state sales tax rate 4%, local and county tax rate of 4.5%, and there's actually a metropolitan commuter district tax that adds the other 3.75. That's how we get our 8.875. If you are a beautician hairstylist, salon, or tattoo artist, you guys collect a smaller tax rate. Just be mindful of that. However, you are required to have that certificate of authority in place. So be mindful of that. Those are not tangible goods, but they're services which are susceptible and are required to do sales tax. Always speak to your accountant, visit the New York State website to find details. You'd be surprised that if I have one of my clients that owns a parking garage, his sales tax collection rate is about 10.375%. So if you are in a special industry, always double check. The main point for you guys to remember is where are the services performed and where are the goods delivered in this case. You can always report your own sales tax, but there are many nuances within that if you are dealing with a special schedule or you're in one of those special categories. So maybe you want to hire a professional to report these on a quarterly basis. This is where it really starts getting thick because by now we've discussed income tax, estimated tax payments. Now we have sales tax payments, which are another quarterly schedule. They run from December, January, February, which, it keeps you busy every month of the year. Some things to know about sales tax. Even if you did not collect any sales tax, you are still required to report a zero sales tax return. Without that, you will be hit with a $50 penalty. So make sure you'll stay on top of your reporting. If you are a little guy, little new entrepreneur, just know that you won't have to pay a tax person to file these reports. You can either file them yourself, or if you're small and your gross tax sales collections are less than $3,000, the state will automatically move you to a yearly reporting standard. So you will only have to file these sales tax reports on a yearly basis. That's good and bad because throughout the year, you are going to find yourself with some money in your bank account that does not belong to you. So I recommend you guys make monthly or estimated payments, not estimated payments, they have to be actual payments on your sales tax, remit those sales tax, because as long as it's in your bank account, it is a liability.
That's a good point. I have a question that came in. Do you pay sales taxes if you are providing professional development services or childcare services?
I do not believe childcare services, professional development services, neither as well. There is this credit reporting services, which I haven't dove deep into that. So maybe you want to look at that on the New York State website, or if maybe that's the service that you're speaking of, it may relate to. So professional services, no. Like I do
that's a pretty broad umbrella, right?
Yeah, I do tax prep service, so I don't collect sales tax. Yeah, but just based on I was looking at it the other day, credit rating or credit reporting services. Any questions about sales tax so far, guys?
When I file sales tax, it asks taxable sales and non-taxable sales. If I got grant money, would this fall under non-tax sales or not be reported?
I wouldn't even report it because it's not a sale. Grant money is not a sale.
Thank you.
And then I would so there is a difference between the full sales and the taxable sales, because let's say you are a grocery store, you make sandwiches and you sell food. There's some items that are not taxable, and there's some items that are taxable. So that's where you would separate the two. And this is New York City, just the state just gathering more information. They want to know your gross receipts, and then what are just your taxable receipts. And you want to make sure you hire an accountant because everything should be in sync. The sales that you're reporting on your quarterly sales tax return should match your annual income tax.
It's got to be consistent.
Yes. So I've come through a lot of people where it's not consistent, and then they want to become bankable and they can't because none of their information is consistent or current.
We are at the 10-minute mark before 10. I'm not sure how much, I mean, you've given us so much to chew on in this presentation. I'm not sure how much further you have, but I
So
want to
this
make sure
one,
you
I'll
have
just
plenty
leave
of
it
time.
here. Yeah, this one, I'll just leave it here for a second. If you're an entrepreneur, look at it. These are other smaller taxes when doing business in New York State. So if you see something that's in your industry, you can hit me up after the meeting and we can discuss it to see if it pertains to you, or you may want to dive deep into that more. But these are little surcharges. An industry that's blowing up right now is truckers, truck drivers. Everyone wants to buy a truck and do Amazon trucking from here to there within the state. So you're going to be hit with that highway use tax as well as the fuel consumption tax. So make sure you know how much gas you're putting in your truck and how many miles you're driving. So that's that one. Okay, so move on to the next
Some very specific ones here.
Yeah. So a big question, these are just other tax topics, so I'll just talk to as quickly as possible. Everyone always asks, hey, what if I donated as a business, as an LLC, or as a sole member? You are limited to that $300 per person because everything is passed through. As a corporation, you can, and you donate something, it's the fair market value, but you cannot donate more than like your actual receipts. Like it just won't make sense that you give away all your money. Another one, a big one for this year is business meals are 100% deductible. Office snacks, all that stuff, if they're purchased from a restaurant. So everyone is behind the restaurant community after COVID. They're even giving these tax incentives for businesses to spend their money at restaurants. So if anybody wants to take their favorite accountant out to dinner, this is how you do it. Right off. Okay, let's go to the next slide. Some of the hot topics that were, if you've been in business before COVID hit, there was PPP Forgiveness. It was not taxable, so it's great on that one. The other big one was an employee retention credit. This is for you guys. Maybe you're a bigger entrepreneur, have a staff, you're a restaurant owner and paying wages to everyone. You actually got, for the first year, March to December 2020, it was about $5,000 retention credit for any employee that you paid and did not have covered by those PPP funds. So let's say PPP covered three months, the other 9 months, if you fall within that category of a decline, you got back $5,000. For 2021, they made it even better. You only had to show a 20% decline in receipts and you got 70% back, up to $7,000 of those Social Security and Medicaid tax. So if you guys were in business back then and had W-2 employees, make sure you took advantage of this credit because it's putting a lot of money back into entrepreneurs' pockets.
It seems very relevant, topical, important for this tax year. Huh?
Yeah, so you just have to have W-2 wages. And that's it. That's my presentation. This is me. My name is Miguel, Tax Focused. I'm always looking for new accountants who are looking to learn and work with me to join the group. I love collaboration and I love working and coaching new business owners. I do everything from business formation, monthly bookkeeping, financial statements, payroll, and all tax filings.
And this is how folks can get in touch. You're over on Sedgwick, which is great, local, like you said.
Yes.
Matos at taxmoles.com and your phone number. Great.
Yes.
And of course, social media, because none of us can live without that.
Yeah, social media,
yeah. So just a reminder, those of us who joined a little bit after 9, we are recording. We will be posting this to our YouTube page, the Chamber's YouTube page, which is the new BXCC. If you don't follow us there, please do. That's where we post our Friday Extra videos and other webinar recordings. And we have such a great lineup coming. You've really kicked us off in such a beautiful fashion. Thank you, Miguel, this is our very first of our How to Get Bankable series. We're going to have many more financial focused webinars coming up and hopefully in person as well, assuming that the wave continues to go down with COVID. So we will be looking to gather in person as much as possible, but we also know that the convenience of, receiving information online and then getting a recording is also very valuable. So we're trying to walk that balance as well. So this will be available as a recording, but of course we really do urge you. I mean, clearly there's so much information, there's so many details. I mean, everybody gets scared around tax season. I have an LLC myself, and I'm very, no offense, Miguel, but I do love my accountant I've had for many years. So and I depend on him for so much. So I urge anybody who's been doing the self-service for a while and has been finding their business hopefully growing and flourishing to consider turning over to a professional, because clearly there's so much guidance that, and knowledge that it's your job to stay on top of, right? And, it's so valuable. So thank you so much. We're so happy to have you as a new member of the chamber. And I definitely hope that you get a lot of follow-up from this, because you've done an amazing job for our business community. Thank you.
Thank you.
All right. Pleasure. All right. So we look forward to hopefully seeing many of you at an upcoming event, whether it be, again, an online workshop or an in-person networking mixer. I do want to encourage everyone to please visit our website, bronxchamber.org. In the top, you'll see it says events. You can just click on that. It goes right to our events calendar. That is the most up-to-date central nerve center, if you will, of all of our events. And we have a very robust calendar coming up. So I urge you to visit often. I do share a lot out on social and in email blasts, because we want to make sure you don't miss any of the upcoming events, because we've been hard at work putting a great calendar together for you. So really looking forward to seeing you, whether virtually or in person, coming up. And Miguel, thank you again so much. This has really been wonderful for our business community. And you can find the recording on our YouTube page, which is the new BXCC. I'm going to put that, Francisco, can you put that in the chat? Thank you so much. The new BXCC is our YouTube page. I also share extensively on all of our social channels, and also in our website calendar, the listings of the events. I change them from registration links to recording links whenever we have something like this. So you can always kind of go back in time and access recordings. We have a bunch from January. You might want to check out the budget presentation from the governor's office, Metro North. That was another great one. So thank you so much. All right. So thank you so much again, Miguel. This has been wonderful. And we look forward to seeing you all soon coming up. Take care, everybody. Have a great day. Have a great rest of the morning. Bye-bye.